All right, and I want to welcome in Robbie Estes. Thank you so much for coming on. He is a partner in Iron Horse Racing, a racing enthusiast, and now inactive CPA. And he's here to talk to us today about the tax implications and possibly benefits. I don't know all that much about it, so we're going to learn about this together of being a horse owner. So, Robbie, thank you so much for joining us today. It's really cool to have you on. And these are the kinds of conversations that I want to have, getting down into the nitty gritty of the dollars and cents involved in horse ownership, especially with all the conversation that we've seen going on today and the past couple weeks after our boy Authentic won the Derby. And I say that because apparently everyone has a piece of them. But thank you again for coming on.
Absolutely happy to do it. I think authentic will go down in the history as the most widely owned horse in the history of racing. You will have way more folks who say I owned them than actually did own them.
Yeah,
But it's always fun to hear those
it's
stories.
quite the situation. I think it was like 4,000 plus my racehorse shares bought in, plus all the other partnership groups that are getting the kickers and everything else in the background that are still a piece of him. So it's quite the interesting situation there. But um, what we wanted to talk about today is more of what you've got going on, because to me it sounds like from what we talked about before and before you hopped on the show was you've got some pretty specific plans in how you approach racing from a financial standpoint and why you made some of the decisions that you did to end up where you are today, which is a partner with Iron Horse. So give us a little introduction of just how you got into racing and how you ended up where you are as an owner, a percentage shareholder in some of these Iron Horse horses
Absolutely
that they have out there.
happy to. I grew up around horse racing. I grew up uh, going to Oaklawn in uh, Hot Springs, Arkansas. Um, Underage, going there,
Yeah.
uh, and and then I had a opportunity to go to college even closer to Oaklawn, which didn't help my GPA at all. However, it was interesting. Certainly saw uh, horse racing out of that viewpoint of going and watching horses run. Uh, Time goes on, and it's more of an interest, Andrew. How does horse ownership work? What does that really do? How does that function? Uh, Especially with today's environment of all these partnerships out there that really didn't exist 30, 40, 50 years back. It was single ownership, you know or two people owning a horse. Now you've got all these different options, anywhere from just a handful of owners of a horse to, as we spoke of earlier, 4,000 owners of a horse, right? Um, it was always interesting to me to own a horse, you know, have have that vested interest on the other side of the race. Um, I spent a whole bunch of time looking at various entities. Uh, we 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 could rattle them off, but there's hundreds of them out there.
Yep.
Which ones work, which ones make the most sense from an investor viewpoint. Uh, Always really interested in, how do I calculate, how does this work out? What do I owe when? What do I get when? How does this end up when it's all over?
Yep.
Um,
And I think we probably went through a similar journey in how we got to where we are, because I'm notorious, and I get a lot of flack from my girlfriend in my slow decision making, because I go through things in pretty excruciating detail. And if you kind of start off with the, okay, partnerships are a thing, okay, there's a whole lot of options.
right.
There's the micro shares, there's the middle level, there's claiming partnerships, there's we're going to go buy a yearling or a 2-year-old, there's buying made horses, and then a million different ways in terms of how they actually share them out. So you've got the uh, those micro shares that you can see with the My Racehorse. There's plenty of mid-level from a price standpoint partnerships. Then you go up to the way high end, where you've got some of the partnerships that say we only deal in graded stakes
Right.
horses, and you can only imagine what the cost of entry is into that. And then they all have different ways of how the managing partner gets some kind of compensation for
Right.
the actual act of putting in the effort. And there is a lot of effort, and don't get me wrong, especially as we get into this conversation, there is a massive effort in getting partners, having the resources to find and purchase a good horse, and have the relationship with the trainers, and make sure that everybody's updated on their partnership, and all of that goes into it. There's a whole lot to it, but there's all kinds of different ways that we see those managing partners get their compensation. And a lot of it happens up front, and I think that's going to be some of what you're going to talk about here, in terms of how we came to the realization that, probably from a model standpoint, iron horse racing is the most financially viable way to go. So how did you find iron horse specifically?
That that is a great question for a whole huge audience. Is, how do you find uh, the entity who best fits your needs and wants? You know, uh, I just did a whole bunch of searching on um, partnership uh, entities who had a high percentage success rate
Mm-hmm.
of horses, uh, operations who were not, I would say, gigantic, be, because as you spoke of, Andrew, once you're huge, and once you're managing, I'll say, 50 horses, 75 horses, 100 horses, what kind of organization does it require to run that sort of horse entity? And how many folks are hired to go do all those little bitty jobs, who have now become a full-time job in their own, because it's so big, right? Um, Iron Horse really hit that model of a smaller operation who had high success with their horses. Um, and that that's what really got me digging into, how do they operate, what do they do, how does it work financially. So that's certainly how I started the journey.
Yep. So was there a particular medium that got you to them? Because for me, I was listening to a podcast made for syndicate runners that actually had an episode that featured Harlan, and he talked about his model, and that's how I found him. So it wasn't through any, because it wasn't, and they don't really do that much, like, or any internet advertising, or you're not going to see an ad for Iron Horse when you're watching the Saratoga live stream.
Right.
You're so how was it, word of mouth? How did you even find them?
It it was really just that digging on the internet of who are the partnerships, and I was really focused on um, you, you can get those lists out of any uh, uh, horse publication of partnership hearses and starters and winners and all
That's
that kind of
good.
stuff. And I really just started out of eliminating the huge the 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 huge operations, because I knew that was something I did not want want in this financial model. And and even so, on a flip side, uh, it was easy to see operations who had who 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 had high success of first and seconds and thirds. If you dug dug though a little deeper, it was only with one horse, or it was only with one trainer, or it was only at one track. It was
Mhm.
something who was it 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 just gave me the feeling of all eggs in one basket with those. And I got got down to a very short list of what I would call smaller operations who 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 had success with multiple trainers and multiple horses and multiple tracks. Um, and then it really became just a how does it work?
Yep. So that's a good
Financial.
segue. Let's get into that a little bit. So I know that there's more motive for you than just being a racing fan, and I totally get the sentiment. I mean, from the moment I went to Gulfstream, I was like, yeah, one day I'm going to own these things. Like, I know that I'm going to be in the paddock, hopefully in the winner's circle. Hasn't happened yet, but we'll get there. Um, I just always knew that it was going to happen. So what I want you to do is educate me a little bit, educate the audience, and let's talk some nitty gritty, get into the
Sure.
numbers, and why you chose this as more than just an interest, but to actually put some money down and get involved.
Right.
So,
Sure. Absolutely. Uh, it's very common today that each horse is set up as a separate uh, legal entity. Every horse out of an operation, whether it's a small one, whether it's a huge one, whether it's all those stakes based uh, entities, every horse is set up as an individual LLC. And it really gets down to, I believe, tax purposes.
yep.
Um, now it also eliminates risk, blah blah blah, but it really works well from a tax viewpoint. When you're an owner like you and I are, you know, it's 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 not our day job. It's not how we make a living. This is uh, something who we do on the side, you've 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 really got to be careful of, is it taxed as passive activity, or is it taxed 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 as an active activity? But because of how you and I are, and a whole bunch of other owners are, it's 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 a passive activity. We have hired out all of the management, all the operations, all the admin tasks to someone else. We are just along for the ride. Because of that passive tag, there's some very special considerations who we have to take into account. The acquisition cost of a horse can be fully expensed in year one. It's tax law. You don't have to, but you can expense up to $1 million of acquisition cost a year, which is another reason each of these horses are set up as their own entity. All right. Because if you added up a horse, operation, a huge entity, they would easily eclipse $1 million of acquisition costs. So they split them up to smaller entities.
Got it.
Since it's a passive activity, though, you and I cannot take that loss on our tax return as long as it's an ongoing entity. Okay. So let's say that we buy a 2-year-old and it cost us $100,000. I own half and you own half. We have a $50,000 expense in year one. Because it's a passive activity, though, we can't take that loss until the horse isn't running, isn't breeding, isn't doing any activity any longer. Who could take us until age 4 or 6 or 8 or 10? Who knows how long? So
right.
in those early years, you are racking up all of these passive losses just on acquisition cost, feed, vet,
training expenses,
all of these expenses, just racking up this loss, right? Let's fast forward to our horse who we split half and half, and now it's a 3-year-old, and now it's starting to have some earnings, and you and I are splitting earnings, Andrew. You can do a couple items with that. You could take the cash and put it right back in your pocket as a return of capital, right? And you can use those earlier losses to help offset this income in its 3-year-old year and not have a taxable transaction yet. That's one way of looking at it.
Okay.
Right? I actually look at it though a little bit differently. I now have cash. I know it's not taxed because I can take those losses out of either this horse who we owned, or maybe
Mhm.
I own another horse with someone else and another horse with someone else. I can take all those losses to offset this gain. I
Mhm.
can add them together if I wanted to. And 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 now I in essence have tax-free cash, which I
Ah.
then use to purchase another horse. And maybe I purchase it this year, or maybe I purchase it a following year, just to help sync up all of these passive losses and passive income off of multiple horses who I can aggregate together and say, this is my total taxable transaction. So it really becomes a game to me, in essence, of how do I time and how do I recognize all of these uh, tax events, especially once you have multiple horses who are at multiple stages in their career, either as yearlings, either as getting ready to run, either as running,
Yep.
either as stallions or mares. It's just, where are all of those horses in their career, and how do you look at it holistically?
Yep. So what is your so essentially what I'm getting is that you take a period of time where you've already had those passive losses, and when the income part starts coming in, it's not taxed because you've built that up and you can put it toward the next venture going
Absolutely,
forward.
absolutely. It's 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 kind of a it's it's kind of a snowball of, uh, effect. And how do you manage uh, the size of that snowball, right?
So yeah, I was gonna say, so the snowball starts getting bigger. When does the day of reckoning come?
Well, with everything, Andrew, there is always a day of reckoning with your taxes, right?
Yep.
Whether it is today or 2 years from now or 10 years from now, it's just, how do you defer it until um, either you have to pay it, because if you liquidated all your horses and you had no more horses, you have to add it all together, and what do you owe, right?
Yep.
You know, or you take a loss. I mean, either way you have to do it. You have to add them all up, and I'm done, and I walk away. Or it's when is the best year, especially if you have cyclical income, high years and low years.
Yep.
Uh, when is the best time to go recognize a gain,
Got it. So
right?
so yep, so it's all about what year best suits you in terms of the loss or the gain that you have at the end of that snowball, and how it plays into your overall taxes for that year.
Right, right, absolutely, right.
Hmm.
Uh, you 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 hear a lot of financial advisors who talk about de- deferring income until you retire, because you'll be in a lower tax bracket.
Yep.
Um, and 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 that's usually how it happens, but it doesn't always happen that way. This type of horse ownership allows you to manage, when do I take those gains, and when can I leverage a loss, be, be, because a horse LLC has fully run its course, and I might be able to recognize a loss for a horse I no longer own.
Yep. So essentially, you let's say, well, probably not 2020, but 2021, you have a great year. But at the same time, you've deferred those losses till 2021. That's the year that you would take them versus 2020 when, let's say you're a contractor or whatever, and you're not having a great year because of COVID. Obviously, you wouldn't want to recognize those losses now. You'll do it at a time where you're in one of those up years.
Right, right. Uh, it's 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 really beneficial, I think, for a person who doesn't have consistent income year after year after year after year after year. I spent that time in a corporate setting. I had that income of a whole bunch of years who was really constant,
Yep.
right? Uh, and then I'm now in a spot where it's not that way, and I can manage it better. Uh, and just how do I time certain items?
Yeah. So essentially, if you take the gains and the losses in the right places, you essentially get to be a horse owner in a tax advantageous type of way where essentially it can cost you less than what the sticker price looks like in the beginning. Is that what I'm getting from you here?
I think you hit it really, really well, Andrew. Yes, yes.
Very interesting. So yeah,
Uh,
I mean, and that's some of the strategy that I'm going to need going forward because I've got into this in the very beginning of this year, and I know that we get the K1s, and I wasn't sure exactly how to play those or what it meant for me, but I think this has been a very interesting conversation. And like you said, if you are in that kind of stage in your life, which I was as well. When I first got out of college, I was an independent contractor doing some IT stuff. And there were some years that it was high and some years that it was low, especially based off of the expenses that went along with that year and everything else. So that makes a lot of sense to me. And I think that it gives uh, people an idea that you can be involved in this in a way that makes financial sense. So with that plan in mind, why does Iron Horse fit this model of becoming a horse owner and being advantageous with your gains and losses better than, let's say, some of the other mid-sized or even some of the bigger partnerships out there, or even the
yes,
smaller ones?
absolutely. I look at Iron Horse, and it's the only one I know of, Andrew, who uses this model of no markup on horses, um, which while it doesn't play a key factor into all of those hacks and nuances who we spoke of earlier, it 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 did play a huge role in my mind about how does the entity make its money? How does the entity operate? Um, and if it's an entity who is marking up horses on the front side, they're making money from day zero.
Yes.
And if it runs well, they make more money. If it doesn't run at all, they still made money, right? So, uh, looking at Iron Horse and looking at what they've done, uh, they have built a model that really forces them into a position of having successful horses because they don't get paid up front
Yeah,
like
they're
so many other operations do.
yeah, they're essentially, if Iron Horse wants to make any money, period, they have to have runners, right? They have to have horses that perform on the track. That's literally the only way the managing partner gets money.
Right,
And that of course would have a positive rollover effect into the ability to roll the money that you earn from the current horses into the future horses, I would
right,
assume,
right.
right? That's the idea.
You've you've got a graphic here up who is certainly a high level example. I would not in 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 encourage anybody to take this as gospel truth of how any horse is ever going to run. It's just a high level example of of spending that acquisition cost in year one. Once what once those horses start to have earnings, really it's just how you reinvest has to all those earnings in in into future horses. You know, eventually that first layer of horses, horse one and horse two and horse three, uh, eventually they're going to either retire or be sold. I no longer own them. And it's the end of that LLC. And there is a tax consequence of that one horse, but it gives me, I think it gives gives me the ability to how do I manage either that gain or that loss at the end of that horse's career. Right?
Yep.
So um, the 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 model of Iron Horse coupled with what I try to do of horse ownership really worked uh, well together because it really was just true acquisition cost, true outlay of capital, and the only way that Iron Horse is going to make any money is the same way I'm going to make money. The horse either has to win, has to has to have earnings, or it's 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 got to be a horse who they can flip for a higher than original acquisition
Yep.
cost.
Yep. Exactly. And it's really hard. I mean, horse racing is not an easy game as an owner to make money. It's not an easy game as a bettor to make money.
Right.
But to me, the reason that I think that the Iron Horse model is so persuasive is that it actually gives you a chance to have
Right.
a blast, have fun, meet people like you and a bunch of people that I've met online so far through Iron Horse, like Stu from the Stewcast, who inspired me to get this whole show going. Um, you get to have all these experiences, and at least Iron Horse gives you a chance to maybe make some money, to break
Right.
even at the very least, And on top of that, you get to have this level of entertainment. You get to have a community behind you. You get to be in the Slack channel and have conversations with people and go to the sales and just all of the extras that are just inherent in being a horse owner, and the experience that you get with Iron Horse, on top of the fact that the only way that they get money is if the horse does well, which forces them to have a way of acquiring horses that are going to do well for you so that they can do well. It all seems to make sense to me. And that's why, even though I don't work for Iron Horse, I don't have any relationship where a single dollar comes from them and goes into my pocket, period. But when I see other partnerships out there that buy a horse for $100,000 and sell shares of it for $200,000 as a valuation right at the day after they buy it and sell out of it very quickly, it blows my mind that can even happen. Or there are other partnerships out there that may say, well, we don't charge them, we don't do a markup, but there's management fees that you have to pay up front that have nothing to do with putting that money into the horse itself. So they can
Right.
say that it's not a markup, but any fees that come before the horse actually making money and being able to roll into this plan that you have is going to be detrimental to the overall ability for you to stay in that partnership and not lose money.
Absolutely. Absolutely. Yeah. I think it's really interesting, Andrew, and uh, a telltale sign of uh, tr- transparency and honesty and integrity. If 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 you go look at uh, Iron Horse's website, it's pretty easy to figure out what you owe when and how Iron Horse as an entity they make money. It doesn't take very much digging, and it's easy to read. And you see, they make money off of earnings, and they make money off of the ultimate sales price at the end of a horse, however that's handled, right?
Yep.
Uh, you go look at some other entities, and I I did a whole bunch of digging. I did a whole bunch of searching,
Yep.
and and some of them are very difficult to figure out who makes money when, and how
Oh
does
yeah.
that work, and how is that calculated, and when does this happen, and when does that happen, and when does something else happen? Uh, just just that idea of here's all the facts, I think speaks a huge uh, accolade to how Iron Horse is approaching um ownership of horses.
Yeah, I couldn't agree with you more. And I'm really excited to talk with more partners from Iron Horse Racing, to talk to uh, owners and partners, whether it be on their own or with other partnerships, and what they think about the model. And, you know, making sure that everybody has an understanding of where their money goes. I mean, we all get excited when something goes on sale and we can save $5 at the store, but then we come into something like this where we say, it's horse racing. I don't know all that much about it. I'm going to trust X, Y, and Z with a large portion of my dollars, and, wonder where it even goes, and how the money is divided up, and just the overall model that encourages the sale price of a horse to be higher so that the managing partner can make more money up front.
Yeah,
There's a lot of issue with I have not with necessarily the people that are doing it, because this model has been set up for a while and they can just say, well, that's how I learned about it, that's how it was set up, so I did my own thing. um,
absolutely.
but and there are plenty of good people that run these partnerships, but it's the model that I have an issue with.
Right.
And I think we saw a shift in the financial industry of going to a model where no longer can you just say, I'm going to charge you upfront fees right away, put my money in my pocket, and you're going to do how you do because I put you
Right.
in this fund or whatever it may be. It's much more shifted to this earnings style based commission for how the institutions make their money. And I think that this is just the natural progression for horse partnerships, is that ultimate transparency, only do well when we all do well. And it allows for a plan like this that you've set up to be advantageous to the partner and allow you to go forward and say, this is something that I can do that's going to be fun and make sense financially for me. So Robbie, thank you so much for hopping on with me. I really appreciate it. I'm absolutely going to put your plan to use in what I do going forward. I feel like I should be paying you like $250 an hour right now, but
Those days are long gone, my friend. Long gone.
hopefully you made plenty of that. And I really appreciate you coming on, hanging the visuals. For those of you who are just listening in, the visuals are going to be up here for you on my YouTube channel. It's just my name, Andrew Grismore, on YouTube. You can see videos of my Bucero baby, the eluding baby on there. You're going to see this on there. You'll see some videos of Jade Empress from Pays and Parks. So go ahead and check out the YouTube channel. But yeah, again, I can't thank you enough. This is really cool stuff, and it just makes sense. And I think that's where the line has to be drawn: transparency and making financial sense. And if you have that peace of mind, then you can have fun going and cheering
Right.
on your horses. So,
Absolutely. Absolutely right, Andrew. I agree totally.
thanks again, and we'll talk soon.
Okay. Have a good day. Bye-bye.
All right. So I ended the recording. We're good.
I have a typo on this spreadsheet here. If I can resend it to you, it's almost where a cursor is, or else you can change it.
I can change
Where,
it. Where are we
okay.
at?
It says uh, if you head to row 12,
Yep.
and it says technically a cash outlay of $50 to buy the fifth, fifth, fifth horse. It should just say 950 of cash and not say 1950 of cash.
Okay, gotcha.
I added an extra digit there.
Yeah. I will change that up real quick and save it so that it is correct.
Yep. Thank you a ton. You know, I look at it, Andrew, of whether